Inflation refuses to cool down, and experts warn supply chain problems could keep prices high longer. What's really driving this dangerous trend right now? Federal Reserve officials are increasingly concerned about rising risks in global supply chains. These disruptions are not just minor delays anymore. They are starting to cause sustained shortages of critical materials and goods. This means manufacturers face higher costs that get passed on to consumers, pushing inflation up and keeping it there longer than expected. The Fed's warning signals that inflation may not be as transitory as once hoped, with supply chain problems fueling a more stubborn inflation cycle. As supply chain complications limit the availability of essential components, companies must pay more to secure what they need. This increased cost pressure has forced many firms to raise prices on everything from electronics to food products. For you, this means your grocery bills and everyday purchases could keep rising for months. The Fed's concern revolves around this ongoing chain reaction, supply issues increasing costs, which then translates into persistent inflation hitting your wallet. Fed officials are adjusting their inflation forecasts based on the latest supply chain data. They acknowledge that while some inflation drivers are easing, the structural risks in supply chains suggest inflation could remain elevated. This shift in outlook means the Fed may need to maintain or even increase interest rates longer to try and tame inflation. Their statements underline how intertwined supply chain health is with the overall economic stability and price levels. Companies across industries are feeling the pinch from these supply chain challenges. From automakers struggling to get chips to retailers facing shipment delays, the uncertainty forces them to keep prices high to protect margins. This persistent pressure also complicates planning and investment decisions, which further slows economic growth. The Fed's concern highlights the ripple effects that supply chain risks have beyond just inflation. They impact the entire business landscape. The Fed's warnings are clear. Unless supply chain bottlenecks ease, inflation will likely remain above target for an extended period. This could mean higher borrowing costs and sustained price increases for consumers. Efforts to improve logistics, diversify sourcing, and boost domestic production are critical, but those solutions take time. For now, the risk of persistent inflation driven by supply chain problems is a key economic challenge in 2026. What this means for you is simple but urgent. Expect prices to stay elevated longer, impacting your daily expenses and borrowing costs. Stay informed, plan your budget carefully, and watch how the Fed responds in the coming months. For more updates breaking down the latest economic trends, subscribe to Daily Q&A now.